So I've been investing in Trading212 for exactly 1 year, and in that time I've been able to build up a portfolio of just over £14,000 in my stocks and shares ISA. But more important than that, out of the 22 investments I have, just 2 are in a loss and 20 of them are in a profit, and out of those profits, some are up by triple digits, with our highest growth up by over 100% in just 12 months. So in today's video, I'm going to open up my Trading212 platform and I'll show you everything that's inside, all the way down to the pounds and pennies. I'll show you my investments in the property sector, banking and finance, technology and AI, and all my ETFs and index funds. We'll go into which of these are the beginner investments and which ones are a bit more advanced. And on top of that, I have built a dividend income from this portfolio of over £700 a year that I'll be receiving and growing for the rest of my life. And I'll show you exactly how much each stock brings me in passive income. So let's get started. We're at over 30,000 subscribers right now, and it is my goal for this channel to reach 100,000 because I really want that YouTube plaque thing on my wall here. So I would really appreciate if you could subscribe and be part of the finance and wealth building journey. So let's start with the beginner investments. Now I call these beginner mainly because they hold less risk. These are my ETFs, which are essentially a collection of hundreds of stocks pulled together. And this means they span over different sectors, industries, and areas in the world. So more diversification typically means less risk, and less risk often means less returns, but also typically less losses as well. My single largest holding, and what I would classify as a good beginner investment, even though it's not my highest profit, is the Vanguard S&P 500. This is the 500 largest companies in the USA grouped into one ETF, and I have just over £2,000 invested here with a profit of 15.3%, which comes to £278. Now, this ETF pays 1% a year in dividends, but I do an additional 4% manual dividend, which is just selling 4% of shares each year. There is a reason for this, and I have a video out on that. But I make £104 in passive income. Next is the Vanguard All-World ETF. I invest exactly £1 into this ETF every single day automatically, and I have done this for the last 150 days for £150. This fund invests in the top companies in the whole world, and by investing every day I dollar cost average, or I average out my purchase price for less volatility. I've made nearly 10% profit, which is £15, and this reinvests its dividends automatically. My last ETF is the iShares China Large Cap. It's also an index fund, which means it invests in the largest companies in China. But this ETF is a bit more risky than the S&P 500 or the All World, because despite its size as a country, China's economy is still a bit volatile. But as you can see here, it has outperformed the USA market in the last year. So I have £848 invested with 11% profit and £85 growth. It also pays 1.6% dividends for £13 passive income every year. Right, let's turn now to property, because I invest a total of £5,000 in property companies, mainly for passive income, but the share prices have also done well. So I have £1,800 in Simon Property Group. This company has grown 4.6% for £80 profit, and it pays me £86 every year in passive income, which is 4.8% dividends. Then I have £1,700 in realty income. This stock is in a small profit of 0.3%, but the benefit to this company is they pay their dividends every single month, just like a second income. So I get on average £7.5 a month or £90 a year, and that's a 5.4% dividend. And last in our property stable is EPR Properties. I have the least invested here with £1,500, but it actually pays me the most with a 6.6% dividend yield. Now, if you don't know, a dividend yield, or the percentage I'm talking about, just basically says that however much you've invested, the dividend is the percentage of the total that you will get paid out in 1 year. So for EPR, every £100 you have invested will pay you £6.60 in dividends a year. Now, EPR also pays dividends monthly, so I get around £8.60 a month or £103 a year. And luckily the share price has done well with an 8% profit for £117. Right, We're starting to slowly get a bit riskier now because we're moving into my finance and banking shares. Still not super risky, but a bit more so than those before. I have 3 finance and banking shares, and the first is Aviva. I recently invested about £700 in this, and I'm luckily in a 3% profit for £23. Now the dividend yield is a nice 5.3% and pays me £38 a year. Next, I'll show you the single biggest money gain of any individual company I've bought shares in. And that company, drumroll, is Lloyds Banking Group. I invested roughly £700 and it's grown by £306 for a 40% return. Now, it's not my highest percentage gain and it's not my highest amount invested, but I invested enough that a 40% growth has given me the largest total gain. So the £1,000 value it now has pays me 3.8% for £41 in passive income. But the dividend on my original investment in this is 5.2%. Then HSBC is similar with a 30% return for a total of £980 invested and £222 in profit. This pays a bit higher with a 4.9% yield and £48 a year. As the interest rates have come down, banking and finance shares have done well this year. Okay, so right now I'm going to take you through my risky investments. Now these include my 2 losses, but they also include all of my highest growth and the most profitable shares out of my entire portfolio, including my tech and AI stocks. But before that, I just wanted to let you know about our Patreon page called the Casual Cash Club. This is a behind-the-scenes look at my financial journey where I share all of the real-time numbers and what I'm doing to improve my financial standing in life. So it includes posting all of my real-time investments in stocks and ETFs, as well as how I'm building passive income to financially retire. So the club includes my investment portfolio updates, as well as my passive income for each month and updates on my overall wealth. And I also have a goal to buy a house, and we'll be showing the progress towards that and all of the details of getting there. When you join, you get instant access to the last 3 years of posts in full, nothing held back. And because I genuinely want everyone to be a part of it, there is a 90% off special to join, so it's just 50 pence. So if you want to be part of around 100 people in the club, you can check out the link in the description for the Casual Cash Club. Okay, so let me show you my 2 losses, and then we'll get on to my most profitable investments. I told you I would open everything up, and that includes where I've lost money. And in actual fact, I've only actually lost money on 1 share. Now the first stock in a loss is the Global X Nasdaq 100 Covered Call ETF, also called QYLD by its ticker symbol. So here's the thing. Yes, this ETF is in a loss. It's gone down by 1.5% for £26, and that's true. But also this ETF pays me a whopping 11.6% in dividends a year. So from the value of £1,700, this ETF has paid me around £200 in dividends in the time I've held it. So I've gotten back a lot more than that 1.5% share price drop. So the total return is a profit. Also, just so you know, this ETF pays dividends every month like EPR and realty income. Then my next loss, which is a true loss in all senses of the word, is Berkshire Hathaway. This stock is worth £150 and it's down by 4% and down by a value of £6. And this company pays no dividends, so it's definitely a loss of £6. Now, a short while ago, Warren Buffett announced he was resigning from the company he built and the share price went down. I've been steadily buying into this share at the price it's been going down by, and I think I'm getting it at a post-Buffett discount. And I'm thinking over time it will show value and go back up based on the fundamentals of the company and its share price history. But we'll have to see as time goes on. But for now, it's down. Okay, let's get to the high risk portion of my portfolio. And that basically means the stocks here are more volatile and can swing in a big direction, either up or down. So you need to be prepared for larger gains and larger potential losses. Now in March this year, amid a new US president and tariff wars, I saw the market had gone down a lot and tech and AI stocks especially were down. I wanted to invest, but I also wanted to make sure I had a stake in the companies that would be involved in tech and AI for the future. So what I did was create my own ETF. I used the Create Your Own Pie feature on Trading212 and I filled it with 12 of the top US companies, mostly in the tech space, and I started investing. That helped me reduce my risk, so I'm not tied to the results of one company, but rather the whole industry. Fast forward 7 months and my self-created ETF is up 33%, and after investing around £1,000, it now sits at 1305. So let's take a look at the companies I invested in and the results. Tesla is up 58%. Pepsi, which I added recently, is up 6.5%. Nvidia is up a major 56%. Microsoft is up by 28%, Meta is up by 22%, JP Morgan Chase is up by 22%. Then Broadcom is up an incredible 77%. Berkshire, we spoke about, is down 4%. Apple is up 27%, Amazon is up 13%, Alphabet is up by a really nice 56%, and then the single highest growth stock in all my investments and the last company in my portfolio is AMD, Advanced Micro Devices, that since I invested 7 months ago is up by 114%. That is crazy. So overall, as you can see here, this self-created ETF is mostly tech, has been an incredible performer this year. Some of them also pay some dividends, but honestly nothing earth-shattering, and you can see the dividends broken down here. Now, I don't want to rain on your parade or mine, but honestly speaking, I'm glad I invested when I did, but these valuations are super high at the moment and I don't know how much growth there is left. In fact, I've been hearing a lot about a perceived AI bubble and that we could even see a major price drop in the time to come as the bubble pops. I can't tell the future, and neither can anyone else, but I would say to approach these stocks with caution. So I've had this portfolio for 1 year, but I've been investing for many years before that, and I know that this has been a very good year, but that not all years will be like this. I was investing through 2020 and 22 to 24, and I know that you have to be able to take the good times and to take the hits and the bad times as well to be successful. But for now, this portfolio has gone in 1 year from £0 all the way up to 14,000, and we have a total rate of return of 24.8%, and it's made a total return of £1,780.93. The portfolio is also currently paying a passive income from dividends of £737.40. Now, that will hopefully continue to grow for the rest of my life, whether I'm awake, asleep, or anywhere in the world. So guys, that is it for today's video. I hope you enjoyed seeing a real-world look into my investing portfolio, and if you want to see more from my investments and other videos on finance and wealth, then please remember to subscribe before you leave and to go and claim your 90% off on the Casual Cash Club. But until then, I will see you guys next time, as always, on Casual Cash. Cheers.